Welcome back to Manulife's Investments Tips. Let's continue David's story. David has already identified his goals and determined his risk tolerance. He realized that it will be difficult for him to achieve his financial goals if he continues to keep a large portion of his wealth in cash. He researched on other investment options and found out that, generally, investments that have higher risk have higher return potential. First, he learned about fixed income like bonds. Bonds are one of the debt instruments used by a corporation or government to borrow money from investors. In exchange, the bond investor receives interest over the life of the bond and the principal on the bond's maturity date. The bond's price will also fluctuate before its maturity date due to market forces. Hence, an investor may either generate a gain or incur a loss if they sell their bond investment prior to the maturity date. One of the key risks primarily includes default risk, or the risk that the bond issuer will fail to pay interest or principal. Bonds of good quality offer better returns than savings accounts. He also learned about investment in listed stocks, which represent partial ownership of a company. An investment in stock provides the investor a proportional share of the company's net worth and the chance to participate in the company's future earnings. The price of listed stocks may fluctuate significantly depending on market forces. Hence, investment in listed stocks may either result in a large gain or loss to an investor. He concluded, while investment in listed stock is riskier, it has a higher return potential than savings accounts or bonds. He realized that a thorough analysis of different investment options requires a lot of time, which, given David's other responsibilities, he doesn't have too much of. So, he looked at pooled funds as another option. He learned that the money of investors that share the same risk and return objectives are put together in a pooled fund. These pooled funds are managed by professional asset managers that have the resources to analyze and monitor the investment outlets of the fund. He concluded that pooled funds provide investors with the opportunity to have a diversified investment exposure and to take advantage of the investment management services of professional asset managers, and that the risk and return profile of the pooled fund depends on the strategy and the underlying investments of the pooled fund. After identifying his financial goals, risk tolerance, and investment options, David is now ready to invest to achieve his financial goals.